This week, many forex analysts are pointing out and warning about low volatility in the market as the US celebrates Thanksgiving Day. The market will be closed on a Thursday, November 23, and a Friday will be on an early closing day. Most of the major US-based traders will likely be taking a long weekend. However, there are some important events that investors should pay attention to. Notably, European and Asian traders are unlikely to celebrate the American holiday and will be active as usual. Let's see what news can influence market sentiment in the absence of traders from the United States. However, in light of the forecast for the upcoming publications, the European currencies are not in favor. On Thursday, experts from the research group Market Economics will publish a preliminary index of the manufacturing activity of the largest European economies. As a rule, data from Germany is closely analyzed as the country's economy is considered to be the locomotive of the European economy. Trends in this sector set the tone for all other sectors in the region. As we can see from the forecast, the situation is likely to improve. However, the decline will only slow down. Thus, the rise of the index to the level of 41.1 points will continue to show signs of a contraction in the manufacturing sector. Accordingly, no dramatic changes are expected in the composite PMI for the Eurozone countries. The value of the index will remain below the 50-point threshold that separates expansion from a contraction. In the UK, the same indicator is likely to retain its previous value, slightly above the 8-month low. The recession will be noted in both the manufacturing and services sectors. Against this backdrop, the British pound will likely lose its investment appeal. On a day off for US traders, European currencies can only benefit from the absence of the sharp reaction. So, the depreciation of the euro and the pound is likely to be restrained. Japanese inflation data will be released on a Friday. At a time when consumer price growth is slowing around the world, the trend in Japan is the opposite. The October data is expected to show an acceleration of the inflation rate to 3.2% on a yearly basis. In the current economic environment, the Bank of Japan is forced to reconsider its policy and take appropriate measures. It should bring the interest rate out of the negative zone, at least to zero. Investors will certainly welcome such a prospect and will likely start buying the Japanese yen. Europe may celebrate a long-awaited optimism, and the business climate indicator in Germany will be released. Markets would like to believe that the recovery will continue. German business is tired of being depressed and is ready to show some positive signs before Christmas. The indicator is expected to rise to a 5-month high. At the end of the week, the US will be betting on the preliminary values of the manufacturing activity index for the US economy. In October, the manufacturing sector was in the stagnation phase, standing at the mark of 50 points. Investors believe that the shaky situation will push the manufacturing sector into recession. If such a pessimistic forecast comes true, the US dollar may end this week with losses. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!